And welcome, it's Mary Ellen McGonagle with your weekly Edge show for Friday, February 23rd. Today, as usual, we're going to take a look at where those markets closed for the week. We are at a new high, and then also beyond what's shaping up beneath the surface of the markets, and also some of the headline news that drove price action last week. And then last up, viewer question of the week. And today it's going to be all about how you can refine your search for downtrend reversals, what characteristics need to be in place to signal that a new uptrend is in place. So first up, that news from last week. On Wednesday, we did get the meeting notes from the Federal Reserve's latest meeting, and at that time it was cited that it's really too early for the Fed to consider cutting interest rates anytime soon. The initial response was a bit negative. However, the markets were able to recover from that because also on Wednesday, after the markets closed, NVIDIA came out with a very strong earnings report, which helped push other AI-related stocks and the broader markets higher. Also, we did see a drop in software stocks last week, all about response to the report of earnings from Palo Alto that drove other cybersecurity software stocks lower. The group is now trending below its 50-day moving average. We'll take a look at that. And then next week, you will want to be aware that a core inflation report that the Federal Reserve pays very close attention to, PCE, that data is due out next week. So let's go ahead and take a look. Where did the markets close for the week? And here we are with a daily chart of the S&P 500. It certainly does remain in an uptrend. Here's that gap up on Thursday to a new high in price. We do have an RSI and a MACD trending higher and in positive territory, all telling us that that uptrend is, in fact, still in place. From here, let's go ahead and take a look at the 11 sectors in the S&P 500. And I do have a 2-month chart, a daily price chart here, and I've added an RSI indicator so that the sectors are sorted by relative strength. Up here at the forefront, let's take a look at healthcare continuing to march to new highs here in a confirmed uptrend. I'll share with you some of the groups that are pushing that sector higher. And then also up here at the forefront are industrials, and this particular group did outperform the broader markets just by a bit, but you can see this gap up to new highs and the clear-cut uptrend of this particular sector. Also, we can take a look at some of these weaker areas. You want to make sure you're not overweighted. And of note is the fact that technology is languishing down in this lower quartile, where it is areas of the market that are generally have been underperforming a bit. Certainly tech would fall into that category. Take a look at the decline that we saw going into those NVIDIA earnings. The group was poised to broach and really potentially trade below this 50-day moving average. And with that RSI in negative territory, it certainly looked ominous before NVIDIA came and essentially saved the day. We can see the group back up above its shorter term moving averages with its momentum indicators in positive territory. Also looking at these particular sectors, also wanted to note here that XLY, this is consumer, and it did underperform the markets last week, but of note is the fact that we are generally trending higher with positive momentum. A lot of these retailers are going to begin reporting their earnings results coming up over these next 2 weeks. So we'll be keeping a close eye on this particular group, as earnings reports have been the big driver of these names that have gone on to fare quite well over the last 6 weeks. From here, let's take a look beyond these sectors and some of these ETFs that I find to be very valuable as far as helping stay on top of where that strength is, the money flows. We have that same 2-month daily price chart view with the RSI. And up here at the forefront, I mentioned healthcare in a confirmed uptrend. This is certainly one of the areas contributing. IHI, medical devices, and you can see that it is breaking out of a nice 3-week base. The group outperformed last week, up over 2%. And looking still quite constructive. Also up here at the forefront, home builders had a very good week, up 3% on the heels of Toll Brothers reporting very strong numbers, and the group overall in an uptrend. However, you will need to be selective. It's not every name that is faring this well. And in fact, for those that don't want to drill down into those names, you can, of course, any of these ETFs can be a part of your portfolio. Let's take a look at another area in healthcare, IBB. This is the biotech ETF. You can see forming the right side of the space, poised to break out. Of note for me is the fact that we're just now seeing this black line up through the red. That's signaling a new uptrend in biotech names. The RSI is moving above 50 and trending higher. And I did mention to you that software stocks struggled last week. Huge decline, a break below this key 50-day simple moving average. I'm using IGB ETF. And we also have this RSI. Now you can see it's just on the cusp and only very slightly above that 50 level. I will need to see the group show more by the way of constructive price action, potentially above these shorter term moving averages, to turn positive on software stocks. But at this point in time, they are generally not looking attractive. From here, I did talk about the concept of looking for downtrend reversals in stocks that have sold off quite a bit. And what I did want to share with you is first a daily chart of Adobe. And you can see this sharp decline that took place. This is all about a competing product being developed elsewhere that could easily eat into Adobe's profits. So certainly fundamentally, I would like to see things get a bit stronger, but I'm going to share with you from a chart perspective how you can tell when you see a big sell-off that the stock is poised to reverse that downtrend and trend higher. So what I have here is a marked up version of that daily chart. And I'm going to take us back to May when we did sell off, broke below that 50-day moving average on heavy volume, similar to what we are experiencing here. And as far as that identifying that buy point, you'll want to see Adobe trade back above these moving averages, the 10, 21, and 50-day. And in conjunction with that, you'll want to see that RSI get up above 50, and then that MACD black line down up through the red is signaling a new uptrend, even more constructive when that MACD gets up above that net neutral into positive territory. So if we look at where Adobe is now relative to what we're on the lookout for, it certainly has work to do by way of moving above these moving averages and getting those momentum signals in positive territory. That's it for this week. Everyone have a great weekend. I'm going to look for you again here next Friday.